For a long time, I lived in the maze of candlesticks. Every morning, I opened the chart as if opening a door to another world, where every minute, every second could either make me lose money or double my account. But the strange thing was, even though I spent hours staring at the chart, I still couldn't understand what it was trying to say. At one point, I saw a clear uptrend. Then, just by switching to a smaller time frame, everything reversed. And I started doubting myself. Was I wrong? Or was the market just playing tricks on me? Until I discovered one thing. The market doesn't change. It's just that I was looking at it from a different time slice. Welcome to Day Trader, where we expose the raw truth behind the waves of the financial market. Here, we don't just talk about profits and losses, we dissect the psychology, mindset, and mental toughness of a real trader. The daytime defeated me. One morning in March, when the Bitcoin market was in a strong uptrend, I felt my heart race every time I looked at the chart. Everything seemed to be happening perfectly. On the 15-minute time frame, the price had just broken the previous high, volume was exploding, and I couldn't resist the temptation to place a long order. It felt like I was catching the big trend, an opportunity every trader dreams of. I took a deep breath, placed my order with firm belief that the price would keep rising and that I was catching the big wave. Time seemed to stop, and I was immersed in that confidence. But just 20 minutes later, before I could even catch my breath, the price quickly reversed, dropping like a falling knife, breaking through all supports. My stop loss was triggered. It felt like everything around me switched off, and I sat frozen, unable to believe my eyes. Switching to the 4-hour time frame, everything suddenly became clear. I realized that the strong move I had just chased was just a technical bounce in a long-term downtrend. I had been defeated by time because I was only seeing a tiny slice of the bigger picture. Had I looked at a wider time frame, I would have recognized this from the start. That day, I turned off my computer and sat silently in the room. A question echoed in my mind. If you don't know what level of time you're in, every decision is just a gamble. I realized that haste and impatience in trading can trap you into knee-jerk reactions, not understanding that the market needs time to develop. It was a painful lesson, but the most important one I've learned in my trading career. Part 2, the first lesson. Each time frame is a world of its own. After that sudden loss, I decided to take time to sit back, observe, and reflect on what I had been through. I spent weeks just observing the charts without making any trades, like a scientist standing before a microscope studying specimens. I no longer rushed into decisions, but instead slowed down to better understand the time frames I was using. On the 1-minute time frame, the market felt like a storm, intense, chaotic, everything happening too fast, as if you had just stepped into an unknown battle. You have to react immediately, no time to think. Every decision could change in a second, and even a slight delay could leave you behind, abandoned by time. When I switched to the 1-hour time frame, everything began to become more organized. I could spot clearer trends, but still had to be cautious of small corrections. The 1-hour time frame felt like a careful analysis before making decisions, though there were still uncontrollable factors. And when I switched to the daily time frame, the market became truly peaceful. Like a calm lake after the rain, there was no rush, no chaos. Every decision I made seemed to be shaped by patience and long-term vision. I realized that on each time frame, the market had its own rhythm, a different story I needed to learn to listen to. In the early days of trading, I often chose smaller time frames because they gave me a sense of speed and ease. I thought that the smaller the time frame, the easier it would be to catch the wave. But it was precisely in the small time frames where the most noise occurred, and that's why I was easily caught up in making mistakes. I learned that to truly understand the market, I had to learn to look from multiple perspectives, from different time frames. If I only lived on one level, I would remain forever blind to the bigger picture. Part 3. How I learned to speak the language of time. After understanding the importance of looking from multiple time frames, I decided to apply a new principle in my trading. Always look at least 3 time frames before entering a trade. I knew that looking at just one time frame would make it easy to miss important information. Instead, I chose to look at least 3 different time frames to make a more accurate decision. First, I would look at the large time frame, usually the daily or 4-hour chart, to understand the overall market context. This is the most important step to determine what stage the market is in within the Wyckoff cycle. Is the market in accumulation or in an uptrend, distribution or downtrend? These questions could only be answered when I looked at a longer time frame where I could see the overall trend clearly. Next, I moved to the middle time frame, such as 1 hour or 30 minutes, to identify supply and demand zones or trap areas. I wanted to know the important support and resistance levels and where the capital flow was preparing to break out. This step was essential for predicting the market's next moves. Finally, I used the small time frame, such as 15 minutes or 5 minutes, only to find the highest probability entry points. I no longer got caught up in predicting the trend on the small time frame, but instead focused on finding the clearest signals to execute the plan I had already set. In this way, I learned that a wise trader doesn't ask, "Where is the price going?" but rather, "Where am I in the picture of time?" This question helps me stay calm and patient, not being swept away by short-term fluctuations. And this is the key to finding big opportunities in the market. Part 4. The truth about time frame conflicts. Have you ever seen this scenario? On the 1-hour chart, you see a beautiful buy signal, but when you switch to the daily time frame, it's a giant bearish candle, and you don't know who to trust. That's called a time frame conflict. I've been caught in it hundreds of times, until I realized it's not that the time frames are conflicting, they are just telling different stories. The daily time frame tells the story of the big money, the ones who create the trend. The 1-hour time frame tells the story of short waves, those who are taking advantage of the smaller waves within that trend. The 5-minute time frame is just noise from those who are in a rush to get quick gains. A good trader knows to choose one time frame language to stick with. For example, if you are a swing trader, live on the 4-hour or daily time frame and use the 15-minute to fine-tune entry points. Don't let the noise of smaller time frames pull you away from the larger plan. Part 5. The true secret. The link between time frames. One day, I recreated the Bitcoin chart from the daily time frame down to the 5-minute time frame, and I realized something interesting. Every breakout on the smaller time frame often starts from a divergence signal on the larger time frame. Every retest on the 15-minute chart is often a supply-demand test on the 1-hour chart. Every movement has an invisible thread connecting it, like blood vessels linking the heart to each cell. This is multi-timeframe alignment, the synchronization between different time layers. When the larger and smaller time frames speak the same direction, the probability of success nearly doubles. Conversely, when the larger time frame is declining while the smaller one is rising, that is the best time to do nothing. Part 6. When you understand the flow of time. You no longer fear losing money. I used to fear every time the price reversed sharply. Now, I just smile, because I know every small correction is just the breath of a larger body. If you zoom in too close, you'll see the heart stop beating. But when you zoom out, you realize it's just taking a pause. Multi-Timeframe taught me how to be patient. I no longer rush into trades because of an attractive candle. I wait until all 3 timeframes align, when the flow of time moves in one direction. And at that moment, all I need to do is go with it. Part 7, Emotions and Time. I realized something strange. Each time frame not only has its own price rhythm, but also its own emotional rhythm. On the 1-minute time frame, the emotions are pure fear and greed. On the 1-hour time frame, it's expectation and disappointment. On the daily time frame, it's faith and doubt. The small time frame traders live in adrenaline. The large time frame traders live in belief. And I choose to be the latter, because I understand. Only those who are patient enough to move slower than the market can truly go with it. Part 8, The Awakening. I remember one night, sitting in front of the ETH USDT chart. The daily time frame showed a consolidation zone lasting nearly 3 months. The 4-hour time frame showed the first higher-low structure, and the 15-minute chart had just had a slight breakout. Everything aligned. I entered the trade. A sweet swing, the price soared over 12% in 3 days. But what made me happy was not the profit, but the feeling that the market and I were speaking the same language. It was the first time I didn't see the market as the enemy. It felt like a friend, as long as you understand how it speaks. Part 9, the perspective of the mature trader. When you first start, you think trading is a game of guessing the price direction. But as you go further, you'll understand. Trading is the art of reading time. The large time frame teaches you about life cycles, that nothing increases forever or decreases forever. The medium time frame teaches you about strategy, that every plan needs structure. The small time frame teaches you about discipline, that every second you can lose control if you are not steadfast. Multi-timeframe is not just a technique. It's the philosophy of a trader. Always look at everything from multiple layers before taking action. The last thing I want to say, if you've ever been led by the market, if you've ever changed your decision just because of a sudden red candle, if you've ever looked back and realized you lost because you weren't far enough to see clearly, then today's story is for you. Remember, the market doesn't need you to guess. It just needs you to understand that everything has its own rhythm of time. When you learn to listen to that rhythm, all your decisions will come naturally. No more fear, no more impatience, only harmony remains. Thank you for listening to this story to the end. If you feel that what I shared resonated with you, leave a like, a comment, so I know you're still on the journey to becoming a strong trader. And if you want to hear more insightful views on trading mindset, hit subscribe to the Life of a Trader channel, where we decode not just charts, but also the psychology and philosophy of a trader.